Good morning, everyone. Today is the 19th of May. This is Brad Matheny. This is the Plan Your Trade video for the 19th of May, Monday. I had a great weekend. Hopefully, everyone else had a wonderful weekend. Was staring at my phone all day yesterday. Had a great time with my family over the weekend. Lots of fun. California cooled off quite a bit last week, or I should say last weekend, and now we're rolling back up into the low or mid 90s. So nice 30, 40 degree difference in temperature here in 2 or 3 days. So we'll deal with it. California in May, June, July typically rolls around and makes for some fun times. So where we're at with the markets is the markets open marginally lower on Sunday. Gold opened a bit higher. You can see the Nasdaq is down 1.5%. The S&P is down 1%. We're going to be looking at a rolling market here. Now, I would urge you to stay relatively cautious of this range. So I'm going to draw the big flagging pattern that I keep referring to in all of my videos. I'll get rid of some of these and I'll redraw them as needed out here in the future. And so where we're at with this move is that we've got to kind of watch this lower channel, guys. It really boils down to, we've got this channeling move here, and we've really got to kind of watch this lower channel for a breakdown. We haven't had a big breakdown yet. A breakdown would occur in some form like this. So again, I'm marking this 560 to 574 roughly area as kind of the breakdown area. In my opinion, coming down and filling this gap is probably highly likely over the next week or two, and we'll see how things play out. If we do get the rolling trend downward that I have been predicting or suggesting was likely to happen off of this peak, remember we have this peak level up here, which is our ultimate high, and we have the low level down here, which is our ultimate low. Anywhere in between these areas here is really just consolidation, the way I look at it. Yeah, we're getting trending. Yeah, we're getting, this big broad downtrend, this big broad uptrend, but we're moving into consolidation. And I've been suggesting for a while, that we could stay in this consolidation range for a while, potentially. We'll see how it plays out. I keep telling you that I think this October low out here is going to be the ultimate bottom. Actually, I think I've got it here. Yeah. So potentially this October low could be the ultimate low level here. We'll have to see if we do what I expect, which is if we stay in consolidation and roll into a low here and then into maybe a deeper low here, that's, playing out as a flagging range. This is a big, broad flagging range, or as we talked about earlier, the shorter term excess phase peak pattern, which I'll draw in a different color, works up to here, flags out here, change the color, make it red, I guess, breaks down into consolidation, and now we're rolling through consolidation. So consolidation again plays out here as these patterns start to stack up. And again, we can keep going through a lot of this. There is an inverted pattern here, which I will draw in purple, that comes down, moves up, flags down, draw in purple, comes down to flag, comes up into moderate consolidation, and potentially breaks up to a new what's called the ultimate high, which would be right in this area. So if we were to roll down here, guys, this consolidation range would be a fairly important potential downward move, and this flag low would be a fairly important downward consolidation area. So now understand that the big broad picture here is we're in this flagging upward, this blue flagging upward. This is the range again that I'm suggesting would be our breakout potential range. And in this manner, I think that we've got to look at this 567, let's call it 560 to 565 level. I think that's got to be our confirmation of a breakdown range or moving into this kind of a sideways range here. I think that's got to be our confirmation of the breakdown. If we stay up in this upper area above 565, 567, then we're just consolidating potentially, maybe setting up a new type of an excess phase peak flagging formation like that. So I'll draw in dark orange. Oops. So again, we've got to see how this kind of plays out, guys. It really is, if this topping pattern sets up like I believe, then we're going to roll downward and we're going to get into this 560, 565 level. Price as the ultimate dictator would indicate that if we were going to break downward, let me move price back up here to the top of all my drawings, then we would likely come down and try to break this level. This would be the next critical level right there in yellow for price to try to come down and break. So based on Fibonacci price theory, we got the gap, we come down, there's our last little standout low. So price would have to come down and potentially break below this level. Try to draw a nice little arrow there. It would have to come down and break below that level in order to actually move into downward trending. Now, there are a couple of little intermediate levels up here, but in reality, closing down below this gap and closing below this 556 low would indicate to me that yes, we're in a pretty solid downward trend. Until then, we're still in an upward trend. We'll see how things play out. Oops. I don't really expect the markets to move much higher, but the markets have been kind of just reacting to news ever since we pretty much hit right over here. This has all been news driven. This has all been driven by tariffs, post tariff actions. The markets are really reacting to news. Now, understand that generally the markets should be viewed with a bullish general bias. Okay. This rotation is broad consolidation within a range. This consolidation will eventually base, bottom, and roll higher. I expect the base bottom to happen after July 2025. So these are the general concepts I want to, stick with you guys today, is that after this low, potentially right over here, this is where I think we'll start to build or attempt to build a base, either here or back over here with the October lows. So again, kind of really looking for that base either in mid-July or early October, in my opinion. Okay, so the SPY cycle pattern today is a gap breakaway in trend mode. We are in bullish trending. We all know that the credit rating, US credit rating, has kind of moved the markets a bit. Personally, I think there's going to be a lot of activity today, pretty heavy volume. I don't believe we're going to get too much below, call it the 580, 582 area on the SPY. That would put us kind of right in this area as a downward target today. Would still be pretty strong, and we could still see the markets roll a bit upward. Remember, we are in a bullish trend. We are in bullish biasing. I believe that we're going to be looking at a potential, 4, 5, 6, 7% downward move. So let me draw that for you. So from current levels of 4 or 5%. So right there would be a 5.5% downward trend. Right to there. Okay, a 6.5, 7.5% downward trend would be down to 550. And then if we were to get into an 8, 9, 10% move, we'd be looking at 534 or lower. So really, I mean, this move here down into the 560, 560, 555, 560 area, that's the initial move I'm kind of looking for over the next week or so, maybe 2 weeks in the market, potentially broadening us into this breakdown mode. Now, as you're aware, this breakdown of the flag here could present a very big breakdown into deeper consolidation. We'll get to that if it happens, but right now it's not really, I don't think it's likely to happen. I think we stay in this area, and I think maybe the July low retests this 480 area, and maybe the October low sets up this 410, 420 area. Maybe. We'll see how it plays out. Right now, we're in an uptrend. We're bullish. I've told you that before. Bullish. And if we get a breakdown, the breakdown should target potentially this level. Potentially this level down here. This 510, 520 area. That would be the ultimate target low. Down in this area, we have intermediate target lows up here. You can see this yellow line. Come down to this yellow line. And then ultimately we have this yellow line right here. So these are our big, broad target lows. Where's my color? Set this to a darker blue. Darker blue. And darker blue. So it gives you an idea that if we do get the breakdown, that's what you're looking at. Target level 555, 541, and 509 roughly. If we do not get the breakdown, then we will roll within this zone. Back over here. We'll roll down into this little red zone and potentially move a bit higher. So we'll see how we're going here. We're very well overextended and could end this move fairly quickly. So let's see how it plays out. QQQ, same type of setup. I have nothing on this chart. I don't want to go too long, so I'll quickly draw the bigger patterns for you. We have the excess phase peak, the minor peak here, rolling down into consolidation. We're in this broad range, meaning that anything within this rectangle is considered consolidation. So understand that anything in this rectangle is considered consolidation. We do have that rotating pattern. We do have the inverted pattern coming down here, rolling up, flagging out. I'll draw that in red. rolling up into consolidation, and then rolling up into our ultimate high. Move this to the back. Okay, and then we have the bigger, broader pattern setting up here, down into this flagging. And again, same setup. So if we were to look to see some sort of a breakdown, we would be looking at a move potentially coming down into this area, filling the gap, consolidating, maybe moving down into this area and consolidating. Same type of setup, guys. Ultimately, we have the ultimate high up here. Really, nothing has changed in terms of the big broad picture here. We have the ultimate low down here. So until we get out of this range, we're in big, broad consolidation. We are still bullish, so cannot argue that we are still in a bullish upward trend. We're in bullish upward flagging. And I would again argue that we have a fairly solid upward channel about like this that would need to be broken to the downside. So in theory, folks, we would be moving down into this consolidation range here to potentially here. Well, actually, maybe here. And that would mean that if we were to get a breakdown, we were to see any type of a move to the downside, it would likely target this area, which represents a 8-9% downside move in the NASDAQ, in the QQQ. So possibly, if we do get a breakdown, -8 to -9% would be a likely breakdown target. And I'll draw that here in blue. There's 9% in blue. Okay, gold and silver are slightly higher. You can see gold setting up here at 32.50, silver setting up here at 32.76. You know, interesting little play here. We do have that inverted flagging formation. We are retesting these flag lows or highs. In this case, this is an inverted pattern. We have the same inverted flagging high here. Getting above this flag level, I will change it to, once I find it, change it to red and change it to red. Once we get above this flag level, we're off to the races, guys. This means that we're now moving into what's called the inverted consolidation phase. I tried to draw it here. Typically, the inverted consolidation phase would be equal to this flag high. So if we come from here to here and then copy and move from here to here, yeah, I had it pretty good. So the flag high would put us potentially up into this area, consolidating and then breaking out into a new ultimate high. Whereas with this case, gold, peak to flag low or high in this case, would put us into this type of a mode, rallying up into consolidation and then rallying up potentially into our ultimate high, kind of right in that area. So we'll see how this plays out. Now, these rally phases, the move to consolidation and the move to ultimate high, in general, I try to map this pullback level. And in general, you see we have about this move in terms of a move higher. But remember, back over here, oops, wrong chart, wrong chart. Where's my SPY? Where did I draw that? Don't think it was there. Don't think it was there. Must have been here. Nope. Oh, here it is. Too many charts. So you remember how I showed you how this whole thing played out here, right? Well, here's our flag, and then here's our breakdown to the ultimate low. So you can see here, here's our original flag length. Let's do it here. Did we move that exact same length to get down into consolidation? Not really. Consolidation was almost double the length to move down into consolidation on the shorter term. And then we move through slight consolidation, potentially down to this ultimate low. So understand that, we're the actual breakaway to consolidation could be quite a bit bigger. So we could have a much bigger move here, potentially to the upside in gold and silver. We just got to wait and see how it plays out. Right now, the big move is right above this 32.55 and for gold and 32.86 for silver. Getting above that level would indicate that we're moving up into the consolidation zone for both gold and silver. Could be a very important upward move here in metals playing out over the next 3, 4, 5 days. We'll see how it plays out. And then lastly, we'll come back over here to Bitcoin. I mentioned last week to watch Bitcoin. We had moved through this cycle phase all the way up into what I was presenting, what could be the ultimate high. This is daily. Come down here to hourly. You can see how we rolled down into the ultimate low. Then, by my opinion, we rolled into flagging right here. You could argue that this could be flagging as well. Then we moved up into consolidation. Then we moved up into this potential excess phase peak pattern. Now, at the same point in time, we rolled up into this area, okay? And you can see these rolling down back into potential flagging, rolling up into consolidation. And now we'll see if we hold this consolidation level or not. So the idea here, guys, is that we really rolled into an extended upward type of a pattern. And I'm sure I could find 2 or 3 other excess phase peak patterns. This being an ultimate high level suggests that this level, this 93 to 97 area, is critical as a potential reversion failure range. Same thing with this level here being a consolidation zone. We have that potential there as well. So if we do fail up here near consolidation and we do roll downward, we are likely to hit this 96, 95 or lower level and potentially try to come down to this 84 level. These excess phase peak consolidation levels really play an important role when you study price and you realize that price tends to revert to these levels, which you can see this excess phase peak level rolling through this flag and rolling through this consolidation, again, rolling down potentially into this flagging low. These all start to play fairly important roles in terms of where price could go. So we kind of have this zone, this zone, and this one, where if we fail here, these are the targets moving downward. Now, do we fail here? At this point, we're in consolidation. So I'll come back here. At this point, we're in consolidation. We've rejected up off of this high, moving back down. We would want to watch this level, roughly 101. That would be the breakdown level for Bitcoin. A breakdown level of 101 means that we would probably target this 95,000 or potentially target this 85,000. And what we would be looking at here, if we were to get a breakdown, we would be failing at this consolidation range. Remember, the big broad consolidation off of this pattern starts from the flag low because it's inverted here, going all the way up to the flag high, which I will just keep to right here for now. And that is the flagging zone. That is the consolidation zone, just like we have on the S&P. That's the big broad range that we could stay within before attempting to break this low. This low down here, this big heavy bar right there, make that dark red, that's our breakdown zone. If we get below this level, that low level, 92, 93,000, that's our breakdown level, indicating we're going to go much lower. So anywhere in this range, if we stay in this range here, we're just in big, broad consolidation, just like we are on the SPY. Okay, oops, forgot to go look at the gold cycle pattern. So we'll come over here. Gold cycle pattern is a big crush bar in trending mode. Crush and bearish trending, you can see here, should be to the upside, in my opinion. They'll come back over here to gold and silver. Could be a nice solid move to the upside today. And again, we're looking at the gap breakaway in the SPY in trending mode. So we'll see what happens. We'll see if we get any kind of big breakaway. SPY, like I said, is off 0.93, almost 1%. Whoops, want to go back over here. SPY is off 0.93, 0.94. We'll see how this plays out. Should be a very interesting day, guys. Really could be the next 4, 5, 6 days could be really wild, and I will leave you with this. So remember, generally we want to have a bullish bias. Secondarily, this broad rotation, the big yellow range here, will eventually consolidate, build a base, and try to roll higher, in my opinion. And I expect that base to happen sometime after July, which is really, in this time frame down here, trying to build a base and try to roll out of this downward trend. I see the markets needing another 90, 120 days to kind of exit this consolidation range. So we'll see how it plays out. If we do get this rollover, this breakdown, like I've been warning about for weeks, this just puts us back into consolidation, threatening to break below this low right here, threatening to break down and try to move into lower lows. So this would be a expected rotation downward, but understand it threatens to take out this low. Remember, price must always attempt to establish new higher highs or new lower lows. That's Fibonacci price theory 101. Always must attempt new higher highs, new lower lows. We got above this high, we got above this high, we got above this high, we rallied up. We never got back up above this ultimate high. We never quite got back above this high back over here or this high back over here. If we fail at this point, we're going to start moving downward fairly aggressively, trying to take out lows. So be aware that, if we fail at this level and roll downward, the next phase is that price will attempt to move downward and start taking out lows. Okay, I'm going to leave you right there. Have a good one and go get some today.